Namaste. So we discussed about the functions of stock exchange in the previous session. Now the older system is the trading procedure was taking place in the corridors of the stock market. Now we are going to go in for the new system, trading and settlement procedure in a stock exchange on a T+2 system. That is, everything is electronic based system. So the revised trading procedure in stock exchange is going to be the topic for discussion today. What happened in the previous years, before 2000, what was happening? Trading was taking place in the corridors of stock exchange with a huge outcry method where the brokers will keep shouting about the stock prices. The prices will be increasing depending upon the demand for the shares, and the share will be given to the highest bidder. By which what happened, everything was taking place in the trading in the corridor of the stock exchange. Lot of crowd, lot of noise and lot of malpractices also. So, lot of corruption was taking place, then fake certificates, share certificates, faulty transactions, default of payment, so many things were happening. And the trading system was carrying on a fortnight basis. That is, the trading will take place on a particular day, the settlement will take place in 2 weeks' time, that is 15 days' time. What happened was, during that time, if the share prices suddenly increase or suddenly fall, the buyer or the seller will refuse to sell, or the buyer or the seller will not pay. The buyer will refuse to make the payment, or the seller will refuse to sell because the prices are not satisfactory. By which the problem was, the brokers were encountering lot of issues, many problems were coming up. So, since the year 2000, rolling system has come. So, rolling system means it is immediate. And with effect from 2003, this T+2 cycle has come. That is trading plus 2 days. So, the whole process of buying and selling of securities will take place in a span of 3 days. Trading day plus 2 days. So, by which what happened is, now the trading is shifted from the corridor of the stock exchange to the broker's office room, and everything is carried on through the terminal, and all the transactions are linked to the main terminal in the stock exchange. So, the stock exchange terminal acts as a hub by which the transactions will take place. No transaction will be missed out from the terminal of the stock exchange, main stock computer of the stock exchange. So, this is the revised procedure, the electronic system. Now, there is no manual system at all. That was originally called as demutualization, where physical certificates were existing and transfer of certificates took place. It took lot of time and fake certificates were possible. Now from demutualization, we have gone in for dematerialization. So electronic form of share certificates, no physical certificates at all. Everything is electronic form. Now, the biggest plus point of this is anybody can see, and there is a perfect transparency in the transactions. So, what are the advantages of screen-based trading? So, everything is through the system of computers only, no manual trading at all. Now, by which what happens is, complete transparency is there. So, any client, any customer who wants to buy shares or sell shares can go to the broker's office, sit on the broker's terminal and watch the share movement, increase or decrease and other things, and the price which is matching with his expected price. If he gives instructions to the broker will immediately finalize the deal. By which what happens, he may be in any part of the country or any part of the world, but the transactions are completely seen, transparent. Similarly, increases efficiency of information. Since everything is very much transparent, information becomes very, very efficient. Then, global access, wide reach. The shareholder, the investor need not necessarily be in a particular place. He will be having a unique identification number. By using that unique identification number, he can see the movement of shares and share prices in the stock market. By which what happens is, physical location, geographical location is no longer a hindrance for stock trading. The next is there is a single trading platform, whether you are in India, whether dealing through Madras Stock Exchange or Bombay Stock Exchange or National Stock Exchange, there is one single window of trading transactions. Therefore, there are no manipulations or malpractices. And the whole thing is through the system of computer, and within 2 days of trading, the transactions are going to get over. There is efficiency in operation. So, mass fluctuation in prices are all reduced, considerably reduced, and fall in prices, heavy loss to either of the seller or to the buyer are all very much minimized by screen-based trading. Now we are going to go to the very interesting topic. What are the steps in the trading and settlement procedure? How are we going to do? I recollect and I reinforce the fact that it is now only on a rolling system that the trading procedure takes place. That is T+2 system only. Trading day plus 2 more days. Within that, exchange of securities and exchange of cash takes place between the broker of the buyer and the broker of the seller who are acting on behalf of their clients. Now, any investor, let us think that we are lay people. We are lay people who want to invest money. Fine. So, what are the steps that we have to follow? Step number 1, any prospective investor who wants to invest money will approach an authorized broker. Please remember, not everybody can deal in stock exchanges. Only a registered broker can act. So, the customer who wants to buy shares or sell shares can do it only through the authorized brokers or registered brokers. So, now first the prospective investor or prospective seller of the shares will have to approach the registered broker. Of course, he will not be a prospective seller, but he may be a prospective investor. Only then he will be the first time client. So, he will approach a broker, a registered broker, and when the terms and conditions are satisfactory to both of them, the broker will issue a client registration form. The client registration form has to be filled up by the client, giving all details. In that, essential detail is the permanent account number, what is called as PAN. Other than that, location of the client, then qualification, if he has already registered with any other depository participant, any other bank details, any other investment details will all have to be furnished in the client registration form. In that, what is mandatory is the PAN, permanent account number. Now, once that registration is over, now the investor has to open a separate bank account for dealing in securities. And he also has to open what is called as a demat account or dematerialization account, otherwise what is called as beneficial owner account with the registered depository participant. Depository participant may be a financial institution, or a mutual fund company, etc., who in turn will have a licensing with the depository. Depositories are nothing but like banks who store the securities in electronic form. So there are 2 depositories in India, NSDL and CBSE. NSDL is National Securities Depository Limited and Central Depository Services Limited. Both are managed by big corporates and Bombay Stock Exchange and Bank of India. So the depository is like a bank, custodian of securities market. Like how a commercial bank maintains our bank account, the depository will maintain our securities in electronic form. The depository participant, who is a financial institution or a bank, who is a registered depository participant, will act as a liaison between the customer and the depository. So, anytime the shares are purchased, the depository participant, the beneficial owner account will be added in the depository or credited, and anytime it is sold, it will be debited. It is just the opposite of the bank account where the amount deposited is credited and amount withdrawn is debited. It is the other way around. So, that will be done. Now, he also has to open a bank account. Now, this job is over. So, the client, after filling up the client registration form, open a bank account, open a beneficial owner or demat account with a depository participant. Depository participant is an intermediary, maybe a financial institution or an insurance company or a bank who is registered to act on behalf of the customer. He will be a liaison between the client and the depository. Depository is the authorized institution which will maintain the shares and securities in electronic form or a digital form. Now, once the job is over, now the client will go for placement of order. So, he will place the order with the customer, with the broker, and instruct the broker to arrive at the best deal. Now, once the broker gets the order confirmation slip is nothing but the order placed by the client for the best price at which the shares have to be purchased or shares have to be sold. So, order confirmation slip will be there. Once that is received, the broker will go to the computer terminal, log into his registered ID and feed in all the details which will go to the main terminal of the stock exchange. Now, the client can see through the broker's terminal how the share prices are moving. Now, the stock market computer, which has got all the details filled in, will keep indicating to the broker the prices, the range. Once the price is acceptable, convincing to the broker and through the broker to the client, now the broker will meet the customer with a matching or best price. Once that is over, now the client confirms to buy or sell as per his agreement. Now the broker will issue the next one, what is called as a trade confirmation slip. That means the deal is finalized now. The price at which the client wanted the broker to buy or sell the securities is now identified and the order is confirmed. So, trade confirmation slip is given. Then, after that, once the trade confirmation slip is given, now the broker proceeds to issue the next one, what is called as contract note. So, the contract is entered into between the broker of the buyer and the customer, that is the client. And the client will be given a unique order code. So, anytime he wants to deal in the securities market, it is enough if he mentions this unique order code. And for all payments and exchange of securities, this unique order code has to be mentioned. Now, unique order code is over. Now, all these things take place on the T day, what is called as the trading day. That is day 0. Now, transactions are all agreed, over. Now, the second stage is the T plus 1 day, what we call as pay-in day. On the pay-in day, the shares are being delivered, the electronic form. The seller of the shares will deliver the shares in the electronic form to the broker, through the broker to the main terminal of the stock exchange. And on the other hand, the broker of the buyer will receive cash from the buyer, which is also shared to the details are also shared to the main terminal. Please remember, cash pay does not mean physical cash, everything is fund transfer only. So, payment details are forwarded to the main terminal of the stock exchange, transfer details of shares are also transferred to the main terminal of the computer, main terminal of the stock exchange. So, the whole thing takes place on T plus 1 day. The second day is what is called as payout day or T plus 2 day, where the exchange takes place. That is, from the main terminal of the stock exchange, the ownership of the document gets transferred from the seller to the buyer. The depository participant will have to inform the depository to credit the client with the number of shares that he has purchased. Similarly, cash is getting transferred to the seller through the main terminal of the computer and the broker. So, by which the whole transaction gets over in T plus 2 cycle. So, with that, the credit in Demat account takes place, the transactions come to an end. So, these are the steps in trading procedure. Totally 10 steps are there. Number 1, the client will have to approach the broker. After the terms and conditions are agreed, the client will be given a form by the broker, client information form. Once he finishes that, the client registration form, he has to furnish all the details regarding the name, place, bank details, depository details, all the details, and PAN details, which is a very essential one. Once the client registration form is over, the client or the buyer will have to approach the bank, open a bank account and open a demat account. What is demat account? Electronic digital transactions in share market. So, opening a demat account or what is called as beneficial owner account with a depository participant. Who is a depository participant? He is the intermediary who connects the buyer with the depository. What is the depository? Depository is like a bank which which maintains the securities in electronic form. So, the depository will credit the securities of the account of the client whenever a purchase takes place and debits the account whenever sale of securities take place. So, depository is over. Then going in for the client will go to the broker, will approach the broker again and give him instructions as to what type of shares to be purchased, etc. So, now he will instruct the broker to go for best deal and the broker will confirm best deal also. So, that time the broker will issue a slip called order confirmation slip. Once that is agreed, now the broker goes to the main terminal, goes to his computer and through the computer he contacts the main terminal of the stock exchange. He will feed in all the information as given by his client and the main terminal will register all the transactions, all the details and keep monitoring the movement of stock market and the price at which it is satisfactory to the broker and the buyer, it will be intimated to the broker by the main terminal of the stock exchange. Now the broker will approach his client and inform about the best deal, best price. If the buyer is satisfied, if the client is satisfied with the price that is mentioned, then the client will confirm. That time the broker will issue a slip called trade confirmation slip. Once trade confirmation slip is done, now the broker will issue a contract note, a contract which is entered into between his client and the broker. And the client will be given a unique identification number. So, for all the transactions, this unique identification number, a unique order code has to be mentioned. Then, all these things happen on the T day, that is the trading day. Now, the transaction is entered into, the contract note is done, order confirmation is done, everything is done. Now, the day 2, what is called as T+1 day or what is called as pay-in day. On this day, the shares are getting exchanged from the seller to the main terminal of the stock exchange. And fund transfer details are getting transferred from the buyer to the main stock exchange terminal through the broker. All these things take place on T+1 day or what is called as pay-in day. The next day, exchange takes place. The broker of the seller gets funds which he transfers to his customer and the broker of the buyer gets the securities transferred in electronic form. It is the responsibility of the broker of the buyer to inform the depository participant to give credit to the securities which are now purchased. So, by all these things in about 3 days time, all the transactions come to an end. Therefore, there is no faulty transactions, delayed payment or fake certificates issued, etc. Now, we discussed about how the trading and settlement procedure takes place. Then we discussed about the fact that delivery of the shares and crediting the demat account is done. Now, let's see a consolidated picture of how the demat account is working. So, number 1 is to identify the broker or depository participant. The depository participant may be a bank or a broker or a financial institution. So, identify a depository participant. Once the demat account is open, we need to identify a depository participant. Who is a depository participant? He is an intermediary between the client and the depository. Depository is a bank for maintaining the securities in digital form. The next one is, now once that is over, then we need to open an account opening to be done, account opening form to be completed and all the documentation to be completed, like how client information slip was done, this also has to be done for opening the demat account. Then immediately after doing that, this is for the existing share certificate. certificates. For those who have physical certificate, now they have to go to the depository participant and surrender their physical certificate which they had it in paper. They have to surrender it to the depository participant to be converted into a demat form, to be converted into a digital form, what we call it as dematerialization of securities. Once the physical certificate is surrendered, now the next one is, now all the details have to be furnished. Now suppose the shares are originally applied through the initial public offer or anything, simple details will be sufficient, no problem at all. But if the shares are sold through the broker, then the depository participant has to be instructed to debit the account for the sale of securities. Once that is done, the broker will now give instructions for delivery of securities. So, exchange of securities has to take place. Now the broker will receive the payment and the whole process will be completed on a T+2 cycle. So, this is how a demat account works. So, demat account is nothing but dematerialization account or beneficial owner account. So, the client will identify a depository participant who is an intermediary. He may be a bank or a financial institution or a broker, etc., who is a registered depository participant. Once it is identified, an account opening form has to be filled, all the necessary documentation has to be completed. After that, the physical certificate should be handed over to the depository participant to be converted into the digital form. Once that is over, now the procedure is completed. If the shares are originally purchased in initial public offer, no problem at all, because that's the first time the securities would have been issued. So the share certificate will not have any other details. Therefore, converting it becomes very easy. So simple details furnishing will be sufficient. But if it is existing share certificate, then if the shares are sold through the broker, then the depository participant has to be instructed to debit the customer's account for every sale and credit the customer's account with every purchase. Then the broker will give instructions to take delivery of securities. And after that, the broker will receive payment. The whole process will be completed on a T+2 cycle, that is trading plus 2 days, pay in day and pay out day. So the whole process takes place in 2 days time, 3 days time only, trading day plus 2 days time only. Right? Namaste.